YNABers. My name is Jesse Meekum, and this is podcast number 30 for You Need a Budget, where we teach you 4 rules to help you stop living paycheck to paycheck, get out of debt, and save more money. And today, I'm going to report a little bit from what I discovered at Finovate in San Francisco. I was there Monday through Wednesday, I think, and of last week. And Finovate is where new companies show their innovations in finance. It was my first time going. It'd be kind of cool if YNAB presented there at some point. But I think we might bore everybody to death when we told them that we aren't huge fans of automating everything. We like you to have to enter things and be a little more in touch with your finances, which, from my impressions, was exactly the opposite of what a lot of the companies, mainly the banks, want you to do. Banks are nice. Credit unions are maybe even nicer. But it's a situation where you just have to be aware of the fact that they do want your money, and they'll get it any way they can. So I've been banking with the same bank for, 15 years or something, and I don't have any intent to switch or anything. But it's interesting to see new products coming out that are all dialed into the idea of having you borrow more, spend more, jump on quote-unquote deals more, and things like that. A few examples. I won't say the companies by name. I don't want to look like I'm slamming any innovators or anything like that. I mean, in that space where you're trying to squeeze profits, it is innovation, and it's good innovation in that it's going to make more money for your market where you're selling. So I'm okay with that. I just want you to be aware as the consumer. You have the ultimate power because you get to choose what you do with your money. So first one, there was a company that, as part of their PFM, which is a personal financial management software, YNAB is a PFM. It's the best one out there. There are others as well. And a big move in the PFM space is to have the banks basically host your data. So you could imagine that a PFM is laid on top of your bank, and it's just another tab in your online banking system. And then you think, oh, yeah, that'd be pretty nice. And the banks are thinking, that would not just be pretty nice, that would be awesome, because they want their bank, their online system, to be the hub of your finances. If you were to consider Mint and say, okay, Mint is kind of a hub, and now take a Mint-type technology and lay it on top of a bank. And so the bank says, okay, now, hey, let's say we're Bank of Jesse. Bank of Jesse says, hey, aggregate all your accounts here, and, go ahead and just connect to all your other bank accounts everywhere else, and then you can have it all in one place, and that's great. And the user's thinking, oh, yeah, this is nice. All my finances, all in one place. This is great. Everything automated, no work. Behavior will be changed. Yeah, right. So they aggregate everything together, and then Bank of Jesse sends a little message down to a loan officer or a credit card, whatever they call them, and calls you and says, hey, we noticed that you have a bank or you have a credit card over at Bank of Taylor, and they're charging you 20% interest. But here at Bank of Jesse, we only charge you 11%. Would you like to do a balance transfer? And you're like, oh, yeah, I would. Absolutely. Or they say, hey, we see that you have a savings account over at Ally or ING or Emigrant Direct, and it's paying you X, maybe, what these days, 0.5%. Well, we've got this CD here that you can get 1.3%. How about switching over? And you're like, oh, yeah, okay. I'm not saying it's a bad thing that you're finding out about products that could potentially make you more money or save you more money. I'm just letting you be aware of why banks want to be the hub and want to have all that information. It's basically like being able to know exactly what other products you have with other banks so they can undercut or over-deliver or whatever it is to get more of your business. Another example. A little integration into an online bank where you can track your savings goals. A lot of people now track it in YNAB. They may, if you don't use YNAB, you may track it in an Excel spreadsheet or something, and you're saying, man, we're going to have a baby in 10 months, right? That's how long it takes. We're going to have a baby in 10 months, and it's going to cost us $5,000 as part of our deductible. So we're going to need to save $500 a month. So you set up the savings goal right at your bank, okay? Right in your bank's online interface. You set it up. It has this nice little graph thing, and you can see how much you're progressing toward it, and that's great. And I kid you not, one of the products that could definitely be sold to someone that said, I'm saving for a baby, you get a call from the bank or get a letter or something. They say, hey, we hear you're saving for a baby. Congratulations. Have you looked at life insurance lately? You need to reevaluate that. You need to purchase some more life insurance. Again, that's a good thing. You should be well insured, especially when you're starting to have kids. And going from no kids to one kid, that's the point where you would insure. So there's that, and they would be able to sell you on that. Or they might say, hey, we've got this college 529 plan that you may want to look at to start saving for your kids' college. That's something else that makes good sense. From a bank, I don't know if you'd get a great deal from a bank on a 529, but at any rate, that would be something they could sell. The scariest thing I heard from the guy introducing this was he basically said, hey, you could see that someone's saving, wanting to save $6,000 for some great vacation. And then they're at $4,500 right now. And you could say, hey, we can give you this personal loan so you can reach, quote, I'm quoting now, reach your savings goal faster. And I'm thinking, what? I was taking notes and I started putting big question marks at the end of that. To reach your goal faster, you would borrow money to get there. At that point, I don't think you've reached your goal. So you can imagine you're sitting there like chugging along on your goal, and then you get a call saying, hey, borrow the money, reach your goal quicker. I don't know. That would tick me off. It does tick me off. And if any of you guys ever use these little savings goals online with your bank, do not do that. Do not borrow money to, quote, reach your goal faster. I shuddered when I heard that. So those are a couple of the developments. One more that I'll share with you really quick is integrated deals. Deals was a big trend. Payments, mobile payments were big there. The PFM integration was big with these cross-sells that they can do or upsells. And then another big one was with deal integration in all sorts of ways. Merchants being able to use a certain payment network where the merchant had data on when you last purchased, like automated data, where then they could just shoot out an email, from some restaurant and say, hey, we haven't seen you for a while. Here's 30% off. You get a deal. Or there was a PFM that integrates into your bank where they have these deals just integrated right into the interface. Like, oh, look, I can get this for X, or I can save this on this. And it's like my mother-in-law who says when she comes back from shopping and she's like, I saved $30. That just sends chills down my spine. It's so incredibly inaccurate. You did not save $30. You spent $60, and the store told you that you saved $30, that it would have been $90. Yet they sold it at $60. It's like MSRP for cars. Who pays that, right? You don't walk off the lot and say, well, I saved $8,000. You walk off and say, I just dropped $32,000. So anyway, integrated deals into PFM. YNAB will not do that. Mark my words. I do not want to be hawking goods at people while they're trying to stay aware of their money. You know what the easiest way is? A little tangent here. The easiest way to save money is to not look at any marketing. Unfortunately for us, that's virtually impossible unless you live in a cave or, out in some rural area where you have very little contact with, or you could turn off your cable. I have noticed my kids watch virtually no TV. We actually just shut off cable. We wouldn't let them watch it anyway when we did. But they don't know what to ask for. They don't know what they want because they don't get marketed to all the time. Hello, awesome, so awesome. Anyway, there's a way to save money. Don't let your kids watch TV. So there are a couple trends there. Thought you guys would want to hear about it. Finovate was pretty cool. I wouldn't mind presenting. I don't know what we would present. I mean, how are we supposed to be innovative when we're telling people to, be conscious, record what they spend? I don't know. Is that new and innovative? Probably not. Thanks for listening. Until next time, follow YNAB's 4 rules and you will win financially. You have not budgeted like this.